Hello, friends, and welcome to the another edition of the Great Indian IPO Show. And I am Vineet Bolinchkar. And in today's episode, we are going to be discussing the fortunes of the forthcoming IPO of Rossari Biotech Limited. Rossari Biotech Limited is a leading specialty chemicals manufacturing company that is coming to the market with its maiden IPO offering. Rossari Biotech is the flavor of the street, given the fact that it is a company which is catering to products in the consumer space as well as the chemical industry, which is currently the heartthrob of the Indian markets. It has a range of 1948 different products under the various segments of home personal care and performance chemicals, textile specialty chemicals, which is slightly down due to the COVID markets, and animal health and nutrition segments. The HPPC or the home personal care and performance chemicals market contributes to about 47% of its turnover, while animal health and nutrition segment is about 10%. The erstwhile textile specialty chemicals, that is the segment with which the company started its journey, is currently now downhill, and the company is now focusing more on the first category, that is the home personal care and performance chemicals market, which has got huge pent-up demand, and the company is making most of it by catering to marquee clients across the consumer and chemical space. So what's great about this company is that it has based its business on 4 pillars of chemistry of the surfactants, acrylic chemistry, enzymes and silicone, in which it has got great expertise. It has 2 R&D facilities, one at Silvas and the other at Mumbai, which are catering to its production at Silvas, and it is a pioneer in providing eco-friendly, sustainable solutions to its customers in a very cost-efficient manner. To support this business, it has 206 distributors pan-India and about 29 distributors spread in over 17 countries, and it has a dedicated staff of 175 which caters to the sales and marketing effort. Apart from its proposed listed entity Rossari Biotech, it also has got 2 subsidiaries, one with a German major called Rossari Private Limited, which is in the cleaning and hygiene solution space, and one of its B2C ventures, Rossari Personal Care Products Private Limited. So let's look at what the IPO offering is all about. The issue is opening on Monday the 13th of July and will run through Wednesday 15th of July. The shares are being offered in the price band of 423 to 425, and the issue size is for about 494 to 496 crores, for which the company will be doing a fresh issue of 11,76,470 shares, while it will also be doing an offer for sale of 1 crore 5 lakh equity shares. The face value of the shares is $2 and the minimum lot size is 35 units. The valuation of the company is quite demanding at the price band of 423 to 425, with the stock being quoted at 33.7 times price earnings multiple for the FY20 EPS of 12.6. And if you look at the FY22 EPS of 18.2, the valuation of the stock works out to a price earning multiple of 23.4. Now 23.4 is not cheap and compares very favorably with other players in the space like Galaxy Surfactants, Vinati and Atul, etc. So why is this company getting such a premium? First, let's understand the promoter background. So Edward Menezes and Sunil Chari, who are the founders of this company, have got over 20 years of experience in this industry, and they have built the company up from scratch. They have been pioneers in adding value to ordinary commodities and providing cutting-edge customized solutions to their clients. This has helped them to build a brand equity which is very strong, that clients literally admire and makes them give them their business. Apart from this, they also are very fast innovators, and their time to market is quick, and they're not ready to take risks, as can be seen during the COVID times when they went out in the market and gathered a lot of business. The promoters have a pre-issue stake of 95%, and post-issue it will be at a very strong 72.7% stake, which the markets really like. So with the promoter background strong and the shareholding having a lot of skin in the game, the market has taken very kindly to this fact. Apart from this, as I mentioned to you, their business model has been proven during the pandemic times. Any business which can sustain the pandemic and thrive in it will definitely emerge a leader in the decade to come. The company had the most profitable quarter in the April-June quarter, and due to the high margins and a wide client base, they were able to surmount the challenges and take business away from their peers and grow by leaps and bounds. Now they're already operating at 85+% capacity. The current Silvas unit is of 120,000 metric tons, and they're just completing an expansion at Dahej for 132,000 metric tons. This more than doubling of capacity will be extremely sufficient to take care of their manufacturing needs over the next 4 to 5 years. So effectively, we can expect that the turnover will more than double with their value-added plays over the next 4 to 5 years. Additionally, they have a very high asset turn ratio due to the fungible capacity. So if one product has to be not manufactured, that capacity does not remain idle. In fact, that same capacity can be used for multiple product types across multiple sectors. This gives them a very good swift-footed advantage to market, helps them have a better turnover ratio, and when you combine this with good profitability that they have and the low working capital cycle of 34 days, stands the company in extremely good stead. No wonder the ROE of the company has increased to 22.8% in FY 2020, and the ROCE stands at 18.8%. And the fast pace of growth which we have seen from FY 15, where PAT has grown at 1656% to 65.5 crores, maybe the growth will not be as fast as that, but 135.5 crores in FY 24 definitely seems to be a probability. That is, the turnover is expected to more than double in the next 4 years. So these are the financials that we have forecasted for the company over the next 4 years. As you can see, the turnover of 600 crores clocked in FY20 is expected to double by FY 2024. EBITDA and PAT, which was at 105 crores and 65.5 crores, is expected to go to 195 crores and 135 crores. And margins are expected to remain fairly constant, with shareholder return ratios of ROE and ROCE at a robust 23.5%. One more fact that I would like to point out that I have not mentioned to you earlier, that one of the proceeds of the IPO issue is the repatriation of the debt. So with the completely debt retiring, the company will become totally debt-free from the next month. And this is one factor which is very much liked by the market. So all in all, we have a very robust and aggressive promoter group that is focused on delivering solutions that the industry wants. They have cutting-edge solutions, they have their own R&D, and with a asset-light business wherein working capital is barely 34 days, debt will be completely paid off, and high return ratios, there could not be anything better in quality than this. The quality of this management and its business will ensure that the company gets a very, very good premium on listing. We recommend a subscribe to this issue. So that's all from my side in today's episode. If you have liked the show, do subscribe and reply in the comments. Tell your friends, and we will see you once again with another IPO update in the days to come.